Hey everybody, Jeremy here with your market bias recap going into the week of May 8th. It is Sunday, futures are open. Really absolutely nothing going on the S&P futures right now. You can see this tiny little green dot here, around 41.51 is the current trade price. Hasn't moved at all really in the last hour or so. Daily chart we're looking at now, quite a mess. We're still obviously in a fairly large, volatile sideways range here, anywhere from 4,200 down to about 4,065. So that's the range. Nothing really to see or do one way or the other until we get a break to the upside or downside. If we kick this out to a weekly chart real quick, that cleans up the picture quite a bit. And you can see over and over again, we have been harping on the 4,200 breakout level here for, I mean, months now, basically going back to the beginning of the year, really. Hasn't done anything wrong on the weekly chart. I actually really do like these long two lower shadow wicks here the last week and week before last. That is what set the lower range at 4,065, along with the weekly 20 period moving average that is curled up and still smiling at us. Not going to be surprised at any price action within the range here. This week, in terms of economic data, we have nothing really on Monday. Tuesday, there's no known news events in terms of our economic calendar, but there is an important event. President Biden is actually scheduled to meet with other leaders and discuss the debt ceiling and the debt crisis right now in the US, being able to actually pay down our debt and meet our obligations. So there's going to probably be some market moving news coming out on Tuesday, even though it's not on the economic calendar here. Wednesday, CPI inflation data is going to be really important. Core CPI, core PPI on Thursday, along with unemployment claims. And then Friday coming in with consumer sentiment. And that's one of the preliminary statements for consumer sentiment, which actually honestly moves the market usually more than the actual report, because this preliminary report gives everybody an expectation as to what to expect for that actual release. So keep an eye on that for Friday. Anyways, getting back to the chart here, like I said, nothing really to do until we break to the downside below 4065 or to the upside above 4200. If we go out to the NASDAQ, very similar chart on the weekly chart here. You can see also very, very similar consolidation. This one is going to be just below 13,370. A break above that level, we should see some pretty solid appreciation, probably pretty rapid appreciation, up to about 13,740, coinciding with the previous pivot back here from August of last year. If we drop that into a daily chart, honestly, if I had to pick between this and the S&P, even though there's been volatility, obviously, and choppy price action in both, I would have to tip my hat to the NASDAQ and be favoring tech still. Not probably a surprise for anyone who's been watching any of the rebroadcasts over the last month or 2 months, because we've been basically singing the praise of tech, kind of holding this market together, honestly, for quite a while now. If we go out to the Russell, overall weakness, nothing really to see here in terms of a trade. Obviously still in a downtrend below the all-important 250 period moving averages on the daily chart. If we throw this out to a weekly chart to gain a little clarity here, we are also below all of the moving averages on the weekly chart. So there is not a bullish trade at all here until we break back above the moving averages on the weekly chart. And I have that set with an alert at 1840. So if we can get back above that 1840 level, the Russell might start to look interesting. It is still just getting pressured and getting the crap kicked out of it because of regional banks. And there's been a whole slew of news the last week that contributed to some of the market volatility about more regional banks going into distress, trying to look for strategic avenues to save themselves. Some of them looking to sell off some of their balance sheets to other larger banks that are more stable. So obviously there's just a lot of chaos and a lot of news here in the Russell 2000. So staying away from that area of the market right now. And then if we go out to the Dow Jones Industrial Average, Again, nothing really to see here. It's hard to play a break. I do have the diagonal resistance channel drawn here and an alert set just to let me know. But I'm not going to be doing anything on this chart. Mostly, I want to know if this breaks above that diagonal channel, just because that will be supportive of other areas of the market. If the larger indexes are all moving together to the upside. So if this breaks, I'll probably be that much more eager to trade in tech or on the S&P 500, but nothing really to see on the actual Dow Jones chart. If I drop this into a daily chart, you can just see there's all sorts of chop, just tons and tons of overhead resistance here, and just no clean levels, basically until we get all the way back above the 34,750 area. So even above the diagonal resistance channel that I drew on that weekly chart. So yeah, nothing to see there. If we go out to gold real quick, gold's not doing anything wrong. On the weekly chart, we're pressing into pretty much all-time highs here in kind of a range between the previous pivots from back in April of 2022 and below the ultimate high price from the year prior in August. So hasn't done anything wrong. Weekly chart still looks good. We're still holding the 9 EMA, which is bullish. If we drop this into a daily chart, we do have a potential double top here. If this does break down, I wouldn't be surprised to see the rising 50-period moving average continue to creep up and then hold the support level once again here around 1970, 1975. Anywhere above that, I am still neutral to slightly bullish, but it needs some time to cook here still. If it just turns around and rips this week, I'll probably be left in the dust because I want to see a little bit more consolidation out of it. Going over to its cousin, silver. They've been trading lockstep. You can see the current chart here over the last, what is that, month and a half or so. Very, very similar to gold. Not really a trade here. We are pushing to the higher end of the range. There is a decent amount of overhead resistance around 2630. Not really interested in chasing anything here. If we did get a pullback down into, like a 34 level or something into this rising 20-period weekly moving average, I might be convinced to take a secondary pattern. But as of now, there's nothing on silver that really entices me. Going out to Bitcoin. Bitcoin is just doing its thing. It ripped higher and now it is in a messy, messy consolidation range, and that is its style. So we see over and over again, that it drops, consolidates, drops, consolidates, rips, consolidates, rips, consolidates. So really nothing to see here. We are just in a wait and see mode and waiting till we get that next pop. I do want to zoom in here, and I apologize for all the other drawings here. I was just doing some analysis a week or two ago, so ignore these levels. But I do like this little wedge pattern that we are seeing. So I do like that. Not going to surprise me at all if we come back and test down to around the 2800 level and try to firm up this rising 9 EMA on the weekly again. I might be enticed to play a break above this diagonal resistance, depending on how long that takes and where the moving averages are. Obviously, we are below the 20 and testing just below the 9 EMA on the daily chart right now. So not really a trade anywhere there for now. If we do get back up above the 29,107, which is the high open of today's future movement, and then can move to take out basically the 30,000 mark, I might be enticed to play some kind of either intraday or 1 or 2 day trade there, looking to front run a breakout up higher at higher levels. But in the short term, nothing to see. Just keep it on your watch list for now. If we go over to crude light, gross chart. That's all I need to say. It needs to go take a bath. It needs to clean up. There's nothing to see here. Going out to Ethereum. Ethereum had this really nice power candle on Friday, and now this tiny, tiny little thing right here, that little doji is today's candle. So it's back below its 20-period moving average again. That kind of makes price action a little bit more difficult to read. We did have a really good breakout potential here at 1930. We got that, but it failed to hold it over the weekend. So now it's just kind of back into chop. Need to see a few days of it cleaning up here before anything else. For copper futures, gross, still in a downtrend. It is holding this support level, which I like. I wouldn't be surprised to see this continue back up and kind of retest this diagonal resistance line, but I see little chance for it to break out anytime soon on that. So this is just kind of gross, not much to see there. Going out to natural gas, and let me just clear those drawings. My apologies. On natural gas, you can see it just got absolutely killed for quite a long time. We've finally put in a little bit of a support level here, and it has held that support level for quite some time now. This is going back all the way back to February. So several months here of price action holding this lower zone around $2. Not going to be surprised to see it come up and try to reclaim this 50-period moving average again. Not going to be surprised to see it fail there again. Still need some time to cook, but I am going to be eventually very interested in natural gas at some point here. If we kick that out to a weekly chart, you can see the 20-period moving average is still slanted very strongly down, basically a 45-degree angle. Give us another month or so, and we might be ready to roll on this. As that 20-period moving average comes down and converges on this 9, I will be looking for a breakout above that or above the pivot highs here, discounting the wick right there. Finally, as we wrap up, just a real brief look. Palladium, definitely in a consolidation range as well, although I have to say I favor the bulls just slightly here. I wouldn't be terribly surprised to see this break and try to take another run up to the upside, but it is below its 20-period moving average right now, so not super interesting. Platinum is a little bit more interesting to me. If we can firm up the support level and then get back up above this 20-period, hopefully it doesn't just rip in V-shape without us. I would love to see this consolidate all of this week underneath this 20-period moving average, give it a chance to kind of roll over and flatten, and then see price break above that and start pulling it higher again. If we go out to a weekly chart, this actually cleans it up quite well. You can see precision test of the 9 on this weekly wick, almost to the penny there last week. I would love to see, like I said, consolidation holding right where it is for this week, and then maybe a trigger above that, somewhere around 1,080 for a trigger the following week if it cooperates. So anyways, trade safe. As always, guys, let me know if you have any questions in the comments. Obviously, to recap, tech is obviously still the strongest, and S&P second, and that is actually signaled on the sectors as well. You can see the XLK sector ETF here has a beautiful, beautiful breakout potential here. So this actually is a potential trade for anyone looking to take participation in the market this week. Stopping somewhere down at 148 or below. You have easy 2-to-1 potential risk to reward to get up to this 163.75 target, which if I back out to the weekly chart, you can see is targeting back up to the resistance level here on the previous highs if we are able to break out. This is actually a nice cup and handle pattern on the weekly chart. Also had a nice W pattern here that broke higher, retested, confirmed, and now is in the consolidation of the handle of the larger cup and handle pattern. So this does actually have a really nice textbook pattern to be able to trade off of. Let's see if we can get some follow through. Finally, just to highlight a couple other things, Bitto, if you want to cash flow some stuff while you wait around for Bitcoin to do something, feel free. This is the one that I usually trade the most. I also trade Riot and Mara as Bitcoin proxies, but there's not really a good setup right now. Comcast looks awesome. Beautiful breakout on earnings. Good backstory with that. Love the volume. MACD pattern looks good. RSI is pulled back and is no longer overextended. And a nice orderly 5-day pullback into the rising 9-period moving average. So if we get a trigger above the high of the day from Friday, which corresponds to 40.63, that could be a really good trigger. Other than that, CRM, great breakout. Google still has a little bit of time. I'm liking the consolidation, hasn't done anything wrong, but we still need some time to develop there. Going into Meta, nice pullback, although on the weekly chart, I still feel like it's overextended a little bit, and it closed below the 200 period weekly moving average again. So I would like to see this fill the gap a little bit more before I got interested. RSI is still overextended on it as well, and I know some technical traders might balk at me for saying that I don't like this setup quite yet. My tune could change very quickly if we get a bullish candle here to start the week and we do break out and confirm this as a pivot. But until that confirms, I'm just seeing still a little bit of weakness, so it needs to shape up a little bit for me. Microsoft powering high after a little high base flag consolidation pattern. It has room to run. So like Microsoft, MU, want to put this on the radar mostly for the weekly chart. You go out to the weekly chart, you can see what I'm talking about here. Really nice resistance zone at 65. If it gets back above 65, it should be get up to go. I really hope that happens before we get into earnings for it. So we'll see what happens for that. And last but not least, just to show it, NVIDIA. I mean, it's hard to see this thing slowing down. I honestly see it coming back up to 325, maybe even retesting highs. This thing has just been a juggernaut, on fire, had a little bit of time off here over the last few weeks, and a nice big bullish confirmation candle off of a 3-day pullback. So nothing to see here other than just strength. So looking for higher prices on NVIDIA as well. Anyways, that gives you guys a few trade ideas. Talk to you soon. Enjoy the rest of your trading week. And yeah, drop a comment and let me know what you think. Bye.